Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.
Promotional support is provided by the Nebraska Farmer Magazine.
Hello everyone, I'm Troy Moling and thanks for joining us today on Market Journal. Hope you're doing well. We have got a jam-packed show in store for you today, so let's jump right in. And we are starting with markets. USDA increased corn production to 15.1 billion bushels, reflecting the updated almost 93 million acre planting estimate from the June 30th acreage report. It left yield estimates unchanged at 179.5 bushels per acre. Ending stocks for the 2021-2022 crop year came in at 1.4 billion bushels. USDA's estimated soybean average yield was left untouched at almost 51 bushels per acre. USDA also left 2021-2022 soybean production unchanged at 4.4 billion bushels. Darin Newsom joined me this week to run through what he's watching.
Here's what's really interesting. We don't know acres. We don't know how many acres were actually planted. I mean, we will at some point this fall know how many acres were actually planted when they're reported to their local offices, and so we'll have those numbers. We don't know what the yield's going to be. We don't know what production's going to be. We really don't know overall what crop conditions are. We can get a good feel for it by continuing to monitor the soil moisture situation, which is showing deficits all across the northern plains and parts of the upper Midwest. So to me, the key is the weather factors. How large is the crop? No idea. Nobody knows. But what we do know is that both the new crop corn and new crop soybean markets, the traders, the commercial side of the markets are not convinced that we're going to have enough new supplies to alleviate all of the tight supply and demand situation that we have right now. We still have a very weak carry in the future spreads of corn, and we have an inverted forward curve in the soybeans. These both indicate that the commercial side is still bullish, still not convinced that we're going to solve our short supply problem. So however big these crops turn out to be, the market is telling us they're not big enough. It's not going to be big enough, at least what we're seeing today.
And Darin, let's move over to corn and soybean export demand. Already interesting what's happening there, but tighter stocks making it even more so, right?
Yeah, it's real interesting because we're about a month and a half from closing out the 2020-21 marketing years, the old crop marketing years. And, as far as soybeans go, we're not going to ship that much more. I mean, we don't have any soybeans left to ship. What's interesting is USDA is overstating right now the U.S. Soybean stock situation. They aren't fully accounting for how tight the U.S. soybeans are. We won't see that until we get around to the September 1 quarterly stocks report that comes out on September 30th. So it's in the corn where things could get interesting. We have to average something like 55 million bushels per week to ship all the 435 million bushels outstanding. So I think we're going to come up a little short of that. We're going to be close, but it's going to come up a little short. Just as they're overstating soybean stocks, U.S. soybean stocks, USDA this time around, different from the previous 4 marketing years, are understating U.S. corn stocks. So I think at some point that's going to work back into the market as well. I think it could add another 200, 300 million bushels to U.S. corn stocks. Still going to be a tight situation. The market's still telling us it's going to be tight. Probably won't ship all of our outstanding exports. We're going to ship most of them. But next year could get interesting again. Let's see what type of demand we start to build up for next year. And the smaller crop in Brazil, the smaller second, the safrinha crop in Brazil, probably going to give us at least an initial boost as far as corn when we start the next marketing year.
And we're in that time of year when a lot of folks out there might be looking to get in that next round of sales. Any advice on that front?
Yeah, it's interesting. Seasonally, this is a time of year when new crop corn and soybeans, these corn and ova beans, tend to go down. They both tend to bottom out, say in the late August, late September, somewhere in that time frame. So I mean, if we've made some sales, we're happy with them, we could actually sit back. If we need to make some catch-up sales, we can look for those days when the market really rallies and get a few put back on. The biggest thing is there's really no hurry because, again, fundamentally, both new crop markets are bullish. So once we bottom these things out, once we put a seasonal low in these markets, they should go back up. Now, my one concern is if I go to the cash markets and I look at their continuous monthly charts, both corn and soybeans look to have topped out long term. So, I mean, this is a very complex picture that we're starting to paint where I think the markets are going to go back up, but I do think the cash highs are in. But if we get a good rally, if we get a good post-harvest or during harvest rally, I think it's going to give us some better opportunities than where we're sitting here in mid-July.
And let's finish up with wheat. What are you seeing in the numbers coming in for harvest right now?
What's really been interesting is if we look at the winter wheat, particularly the hard red winter wheat here across the southern plains, and for much of Nebraska, Kansas, and so on, we've had better than average, and in some cases better than expected yields. But the protein has been way down because it was never the crop was never really heat stressed. So we've got good yields. It's just been a delayed harvest because it's been so wet across the southern plains, which is incredible, which is unusual. But the market's held together relatively well. Basis has stayed strong. So what I've been hearing for the last few months is that, particularly across the southern Kansas and parts of Oklahoma, we've seen a lot of hard red winter wheat going into feed because corn was hard to come by. So that area, that major feeding area, has already made the switch. But visiting with folks down in that, down in the southern Kansas part, growing area, they're also hearing that they could switch, that these feed yards could switch back over to corn if wheat gets too high priced. Now, the catalyst right now in the wheat market is spring wheat. I mean, we've got the dry conditions and now hot conditions going across the northern plains. There's a great deal of concern about the loss of production of spring wheat. We're seeing the spread between cash spring wheat and cash hard red winter go to more than $2, almost $2.30 right now. It's an incredible move. Everyone's wanting to pay up for protein, and everyone's driving the Minneapolis market higher. And this is helping support winter wheat as well. So this is all going to have to play out, but it could eventually price hard red winter out of the feed ration again. They switch back over to corn if we have good crop, and that starts to hit basis a little bit where we've seen strong basis in winter wheat for the last year or so.
Next week, we'll be joined by author and analyst Elaine Cubb. If you have a question you'd like for me to ask her, email us or get in touch on social media, and I'll pass your question along. Next up, last week we discussed how leasing land for solar development is growing in popularity. This week, in part 2 of this series, Nebraska Extension's John Hay is back to go over what landowners should consider when taking on a land lease for solar development.
Utility solar development is a growing industry in Nebraska, and some landowners may see that as a potential source of revenue. The first consideration that needs to be made is the most obvious. Do the benefits of this contract justify the long-term commitment involved with solar land development? If you feel the contract would compensate you sufficiently, there's still a number of considerations and calls you should make before signing on the dotted line.
A person thinking about leasing land for solar needs to have some conversations. Obviously, we already mentioned talking to their family. Talk to your tax attorney. Talk to the FSA office. How does this solar affect your farm programs for that particular piece of land or any adjacent pieces of land? Talk to them about that. Obviously, your own taxes and your tax liability. Does it impact that? And how does it impact it? Your tax accountant can help you figure some of that stuff out. And then talk to an attorney to make sure an attorney is looking at that contract. So those are some calls that need to be made if you're serious about considering that.
If you come to the conclusion that this is the right thing for you to do, the next thing you may need to consider is how this decision could impact not only you, but your neighbors and community as well. It's paramount when discussing land use of this proportion that all parties involved directly and indirectly have an open dialogue about any potential grievances that could arise during the terms of the negotiated contract.
I want to recognize that some of those feelings are very real, and they can cause stress and anger and things in that community. And so, although I can't necessarily fix those things, I do want to encourage people that maybe they don't want solar to communicate. communicate with your neighbors, communicate with the solar developer, communicate with your county officials. The more communication they have, hopefully, the better understanding you'll have. And whether you can stop a project or not, at least you can communicate and have your voice heard. And I think that communicating with the developer can be a positive, because if you can communicate specifically things that you're concerned about, there is at least a potential for them to try to act on that and try to mitigate and reduce the impact of what your concern is. It doesn't guarantee it, but at least you're communicating it. So it's definitely real that anytime you're going to put a development in a place, there's going to be a group of people that may not want it, and that's just going to happen. And I want to talk to both the people that want it and that don't, that this is a tough situation, and communication is really key to even getting anything started.
It's a well-known fact there are inherent dangers associated with electricity. Nonetheless, it's critical to consider the health and safety hazards associated with any new solar development. While there are some real dangers associated with the electricity produced by these solar farms, the good news is, so far studies confirm there seems to be very little health risk involved overall.
And there's been a good study done at North Carolina State where they looked at the health hazards related to solar, and they tried to put them into different categories. And in general terms, there is very little risk involved with solar, and that's because the components themselves have very minor toxicity. There's aluminum, there's glass, there's silicon, and there's just a little bit of lead in the solder, and not even a lot. And so those are fairly low toxicity compounds. So really we have this product that's not very toxic. You also have electromagnetic fields, of which we deal with every day, right? And so there's a lot of study about electromagnetic fields. And again, as long as we're keeping a distance from them, and that's one of the reasons that we have a fence around the solar, so we can't approach the electromagnetic fields or the high voltage electricity. And then also there's setbacks within that they're trying to set back away from homes and other things like that. And so those distances essentially mitigate those issues.
One of the last things you need to consider is also another big consideration. Solar land leases are quite lengthy and may run through new generations of landowners. So it's especially important to consider how the development will be decommissioned in the future.
Well, when a solar farm is at the end of its life, obviously some decisions have to be made, and that land lease is going to tell us a little bit about what might happen. One is that land lease might be a certain number of years, let's just say 25 years, with an extension of another 15 or more years. So we may renew that lease and keep that solar farm either running or maybe fix it up and have a second solar farm in that same location over time. So we could extend it. That's one thing that could happen. Another is we decommission it, we take it down. And that's a very costly process. And so to try to reduce the risk to the landowner, reduce the risk to the county, and who might be left with that if maybe the company walked away. There are laws in the state of Nebraska that say a decommissioning security or a decommissioning fund needs to be put in place after 10 years. And so then if that decommissioned at year 20 or 25, the money is set aside already to take that down back to whatever terms the decommissioning plan is in place. And so that's to remove the materials. It is costly. There's a lot of material there. The one positive about solar is the fact that there's very little concrete. Those are, a lot of times they drive I-beams in the ground. And so we don't have a lot of things we can't remove. So transitioning that back to a farm field in the future is definitely possible.
If you are a landowner and are contacted by any entities interested in leasing your land for solar development, these are just a few things that you should keep under close consideration before putting any ink to paper. Reporting for Market Journal, I'm Bill Dodd.
Thanks, Bill. John also tells us that due to the long duration of these contracts, it's important to keep a succession plan in mind when considering a solar land lease. We've got more on the Market Journal website, along with part 1 of this series on the role of solar power in agriculture. Next up, shortly after becoming president, Joe Biden signed an executive order announcing his commitment to protecting 30% of U.S. land and water by the year 2030. In May, the administration released a preliminary report about what's become known as the 30 by 30 plan. It's led to a lot of questions from farmers and agricultural groups about how the land they own may be impacted by this initiative. Nebraska Extension Ag and Water Law Specialist Dave Aiken joined me on the show to offer a little more clarity on the implementation of the 30 by 30 plan.
Well, the funny thing is, Troy, that I think that we're already there or pretty darn close. One of the reports that was cited in the May report that came out talking about the 30-30 plan said that you are well over 750 million acres, and 770 million acres looks like the maximum that you would need to get to 30-30. And so instead of only being at 12%, this looks like we're at 29.5%.
So that being said, why is this plan so controversial?
Well, farmers and ranchers and forest owners understand that they own the land that would be potentially in this 30-30 program. And so they're saying, wait a minute, you know, this affects us directly, and we don't have near enough detail to have any confidence about how you're going to do it. Now, the plan talked a lot about, you know, the conservation programs and like the CRP program and the ag program and stuff like that. And that is most likely how they would proceed. But the clarity isn't there, and certainly the correct information in terms of what do we need to do to get to 30-30 isn't there as well. And so there's some issues there, I think.
Because, you know, you may have even some of our audience sitting at home right now thinking, okay, I'm going to be forced to give up my land. But that's not exactly how it's going to work, though, right?
No. At the worst that could happen would be that your land would be condemned, you know, like when they're building highways or something like that. I mean, they have to do condemnation for that. Like the pipeline, you know, the Keystone XL pipeline, you know, they were going to have to condemn right away for that. But I can't imagine, for this kind of stuff, they rarely condemn private property. I mean, it's too much hassle and there's too much pushback. And so they go in and try to and offer people as much money as they can to get them to sell it voluntarily and that kind of thing. And so that's, and I think it'll probably end up being more like the Conservation Reserve, where you sign a contract for so many years and then it comes back to you. And it's up to you whether you want to renew it or not.
What has been the response from farm and ag organizations from around the country?
They have been very, very unhappy with the 30 by 30 proposal. The response to the plan that came out in May was a lot less muted than what happened in January when the president made his speech. But there are still a lot of details to be fleshed out that haven't been. And if this goes anywhere, that's probably one of the first things they'd have to do.
Yeah, so what happens next?
Well, we've got to wait and see what happens to the president's budget. You know, that's kind of in a log jam now in Congress. I think it's safe to say he's not going to get all the money that he's asked for. So when he does get his budget, he's going to have to make choices. And if this is a climate program, if I were president, I'd put the money on a super grid or on encouraging more wind and solar development or carbon sequestration, the stuff that will actually move the needle towards getting us closer to net zero emissions by 2050. 30-30, if it moves the needle, it's not very much. It's more hanging on to what we have, which is important, but getting the emissions down is not going to happen with 30-30.
We've included a link to where you can learn more about the 30 by 30 plan on the Market Journal website. Moving on now, and market prices for major commodity crops have been volatile this season, but generally in an upward trend, offering farmers an opportunity for greater profits. But input prices, including fuel, have also climbed significantly in recent months. That's why ag economists are advising farmers to adjust their crop budgets and economic cost of production numbers to reflect these changes. You can learn more about how input cost hikes impact crop budgets in the July issue of Nebraska Farmer. Time now for weather with Nebraska Extension Ag Climatologist and Market Journal Chief Meteorologist Al Dutcher. Always good to see you, Al. What is the big story with the forecast this week?
Well, Troy, we actually had some precipitation this last week, and some of it was a little bit more than what the models were actually suggesting. And overall, if you look at this weekly totals from like last Saturday through this Saturday, we are essentially looking at anywhere from 2 to 3 inches in some selected spots in northeastern Nebraska, particularly that Niagara River Basin, the eastern portion of it that was into the D2, D3 rating. Also in the Omaha metropolitan area, and then we've seen a cluster of that type of precipitation around Grand Island, and anybody else in between pretty much was in that anywhere from a 1/2 inch to 2 inch range. The big losers were the southern panhandle and southwestern Nebraska that really was anywhere from 0 to less than 2/10 of an inch of precipitation. We do have a couple opportunities for moisture this weekend, and then the heat returns in earnest, and it looks eerily similar to what we went through during the middle part of June. So let's take a look at the upper air models, and the first thing we'll draw your attention to, here's that dome of high pressure. Of course, the counterclockwise swirl around this will bring some monsoonal moisture up into the central Rockies, and this little trough moving across the northern plains may be just enough to induce some thunderstorm activity, particularly when you consider the surface low in southeastern Montana will slide toward the east. That will generate some thunderstorm activity through central Nebraska, and some of that will lift off toward the southeast during the daytime hours. And then as we get into tomorrow, that high pressure system starts to lift toward the north. The flow around the front side of it will bring moisture right back around the top of that ridge, and we may see some residual precipitation breaking out across portions of north central Nebraska and the Panhandle, and this will again shift toward the southeast. By the time we get to Monday, now we start to see this ridge building toward the east, so our basically temperatures that are a little bit below normal will all of a sudden rapidly rise with this high pressure bringing in a southeasterly flow. So we'll see a little bit of that residual moisture during the morning hour, and that looks to be about it as we go through the remainder of the week as this high pressure system builds rapidly toward the northern plains. And that means that we'll be looking at widespread 90s to low 100s from western Nebraska all the way up into the northern plains. And you'll see that the majority of the precipitation will stay to our south. Now, as we get into Wednesday, the high starts to shift a little bit farther toward the east, and we'll start to see temperatures in eastern Nebraska moving up into the low to mid 90s, probably looking at upper 90s to low 100s across the Panhandle. We see low pressure in northeastern Wyoming, but all the moisture return is going to be hanging down into Texas. By Thursday, this ridge builds all the way up into southern Canada. We do have a northerly flow on the east side of this ridge that will keep temperatures confined basically in the mid 90s across eastern Nebraska. We're still looking at upper 90s to low 100s across the western part of the state, and you notice no precipitation. And by Friday, this ridge reaches its peak, according to the models, as it moves all the way up into central Canada. Very hot conditions over across the northern plains, and we'll probably see some of that heat start to move into eastern Nebraska. Could easily be looking at upper 90s and maybe a few low 100s, particularly across the southern counties. As we go farther into the future, let's take us to next Thursday through the following Tuesday. That ridge still remains in place. We have temperatures below normal to our south. And in terms of precipitation, with that high pressure system in place, below normal, but notice the monsoon moisture. That looks like it starts to arrive as we get toward the end of the month, and that may break down this heat ridge.
Thanks, Al. Finally today, with a return to in-person events, Market Journal is highlighting some of Extension's summer field days from around the state. On June 30th, Nebraska Extension held the 2021 atrazine glyphosate-resistant Palmer Amaranth Management Field Day in Carlton. Palmer Amaranth is a member of the pigweed family and has quickly become an annual headache for many corn and soybean producers in Nebraska. The field day highlighted experiments that demonstrate the most effective management tactics for this herbicide-resistant weed.
Overall, the message was like we have to use a pre-emergence herbicide with multiple effective mode of action applied at planting, whether it is in corn or soybean. In both, those pre-emergence herbicide applied at planting is very, very critical to provide initial control of Palmer Amaranth because our post-emergence herbicides are limited, considering the fact that this Palmer Amaranth is resistant to atrazine, glyphosate, and ALS inhibiting herbicides. That means at least those 3 group of herbicides are out of your alternate herbicide program, and you have to find out some alternate herbicide programs to control them. So that's the take-home message is, pre-emergence herbicide at planting, and then you may need to think about a post-emergence herbicides when your Palmer Amaranth is less than 5 inch tall. The most important thing is just timing is everything when it comes to controlling Palmer Amaranth because it's very difficult to control weed. It can emerge throughout the growing season, and it can produce a lot of seeds. So herbicide is important, but timing is also very critically important for management of those Palmer amaranth population in corn and soybean.
Two other varieties of weeds are giving producers a hard time in the fields this season, waterhemp as well as velvetleaf. We were able to get some information on managing them as well.
Waterhemp is #1 weed problem in Nebraska as of now, and maybe in future we might have Palmer amaranth as #1 weed, because waterhemp is more widespread in eastern part of the state, and again, similar to Palmer amaranth, waterhemp has evolved resistance to number of herbicides that includes glyphosate as well as ALS inhibiting herbicides. So again, take home message for waterhemp is #1, scout your field. If you see a lot of waterhemp population, try to target your post-emergence herbicide when waterhemp or Palmer amaranth, they both are less than 5 inch tall. Velvetleaf is a weed which is among top 6 problematic weeds in corn and soybean production in Nebraska. Fortunately, we don't have any herbicide resistant velvetleaf in Nebraska. That means it can be effectively controlled by herbicides such as glyphosate as well as herbicides such as cadet, which is very good for controlling velvetleaf in corn as well as in soybean. However, we are seeing a lot of escape of velvetleaf when dicamba is the only herbicide applied, particularly when you apply dicamba when velvetleaf is more than 7 inch tall, then it will not provide effective control, and you may need to either mix your dicamba product with glyphosate or with cadet. So that is a take-home message I would give for effective control of velvetleaf in corn and soybean.
You may also be interested in 2021 forage field days on August 5th and 6th. Topics include subjects ranging from successfully managing chop length to forage insurance options. Registration is due by July 28th, and there is a $30 registration fee. To register or get more information, you can call 402-254-6821. That's going to do it for this week's show. Next time, Elaine Cubb joins us to discuss what's making news in the markets, and we'll catch up with Extension Educator Jenny Reese to talk mid-season hail damage and what to keep in mind when dealing with insurance claims. Hope to see you right back here next time. I'm Troy Moling. Thanks for watching.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.